Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, yield curve is highly inverted. We're going to talk more about what that means and timing wise, what you can expect. So let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob. So we touched on this a little bit last week with the yield curve, but I think now we got to kind of get into the nitty gritties of, how is this going to play out going into the rest of the year?
Yeah, so let's talk the long term first here is that, and it's really important. If you guys haven't figured out when people say, when will we know? Well, the market is telling you when you should know. All right. So it's going to be no surprise when this market tops. And for those that troll us all the time, take a chill pill. When the market uninverts, then doom is coming. Okay. And the first chart here is the 10-year, 3-month. Phil talks about this one a lot. It's just giving you perspective that the average time when it goes inverted to when recession starts is 589 days. We're at 563 days. The only reason why this is important is that now we're pushing into a rare air in terms of the number of times this happens and kind of where we are with the process. There's obviously outliers. I don't think we're anywhere near the 1966 world, okay? Because inflation really started taking off after 1967, 68 under the Great Society. We're already knee deep into, I think we're closer to what's happening in 1966, 68 than 66. So that's the one thing, and that puts us right at the end of August, okay? Number one. Number two, this is a really interesting chart. This is like an intensity of the inversion. Basically, 70% plus of the different yield maturities are inverted right now, Phil, which is absolutely insane.
Yep.
It's like walking into the room and oxygen being slowly taken out of the room, and you're being left with just carbon dioxide and nitrogen. Okay. Eventually, it suffocates you. And that's what it does economically. It suffocates people economically. And we're at a point now where it's so inverted that it's always reverses and goes into a recession. But the third chart I want to show you, Phil, is now more short term. And this is, guys, everybody's looking for edges and alphas. CPI week, it's actually been beating for the most part. There's already risk being assigned to it going into the week, and then the weeks have been beating. So is another CPI week. So there's going to be some opportunities, and where they say the opportunities are going to be is the regional banks. And so I thought I'd share that with you guys too, because remember, markets don't go straight up and they don't go straight down. And there's these weird anomalies that show up. So I thought I'd share that with you guys. And your point I want to make before I throw it over to you, Phil, is that there is a liquidity tsunami coming. Let me explain. The Fed is going to provide liquidity just in the nature of what it's doing. The Treasury is providing liquidity by how they're going to manage their debt. Companies are providing liquidity because they're going to be buying back shares and shrinking supply, okay? And actually, investors are going to be providing liquidity because they're raising cash with these 5% 90-day yields, and they're going to be putting it to work. So there's a lot of opportunity here for money to come sloshing into this market here ahead of the election, because nobody's going to really want to be long going into this election. This election is so consequential to the future of the country. And I think people are going to take that opportunity to really lift this thing. The Democrats have an incentive, obviously, to make people feel good about a decision for them. Okay. The Republicans have an incentive to be out of the market in case Biden wins. Okay. Because things are going to get nasty for, I would say, capitalist leaning people, because we're going to go a little bit more socialistic and communistic, I think, as we move into 25 and 26. And so I thought I'd share these things with you guys, Phil. I think this August-September thing is lining up bigly. But there's some short-term opportunities that are showing up here too. And I'm also smelling it in the semis too. So we took a position in NVTY today. So I think Taiwan Semiconductor is leading the charge, which means that NVIDIA will probably follow. I'll throw it back to you.
I agree with you on the liquidity. I think there's going to be a ton of liquidity available for the markets going into summer and, like you said, potentially August, September for a top seasonality. You know, the election year seasonality is very bullish when we go towards the end of May into June. And this is especially true when Q1 is greater than 5% growth in the stock market, which is what we had this year. So there's really good odds that whatever like chop solidation we're going through in the month of May, we'll see that resolve as we get out of here. Now, do we pivot off of CPI? Does CPI come in soft and we get a bid? That's possible on Wednesday. So I think Wednesday is going to set the tone for quite a bit. But we also, we have OPEX, right? So we have to see what the reaction is. There is a bit of softness post OPEX. So there is a potential that we do finally see a, pullback that kind of finishes off into the last week of the month. And then we start to see that turnout. But there's going to be a ton of liquidity because they've been raising also the reverse repo balance, right? And when that goes up, liquidity drains, but then that also sees an inevitable drain on reverse repo, which then adds liquidity back. So they've been pulling that back up. I suspect they're going to draw that back down, probably because T-bill issuance will step back up the closer we get to election. So I think all of that stuff really jives with what you're saying, and that once we start to get out of here over the next couple of weeks, we're going to see a very concerted effort to get these markets to go up. And I think the options market will continue to give them those tailwinds, right? Because you get into those positive feedback loops in the options market. And I think you're going to see some silly moves in everything. Meme coins and crypto, meme stocks. We already saw GameStop today going back because Roaring Kitty came back on social media and that thing just started blowing out shorts bigly today. So, you can certainly see all that stuff happening, and it can be another episode like we saw toward the end of 2021 when everything was catching a bid. The difference this time, though, is the macroeconomic indicators are vastly different than 2021. Unemployment's ticking up. We'll have to revisit those numbers again because every week now we're starting to see that go up, right? We talked about the rounding bottom in the unemployment numbers, and that's starting to continue to be a worse picture. So I think that's going to play out exactly like you said, Bob. And I think all of the elements are in place for that.
Hey, one more thing too, Phil. They're going to come out with a meme coin ETF too, so we'll bring it to you once
Why
I
not?
get the detail. So I'm just saying, the GameStop meme coin ETFs, the casino is open.
Yep.
And I think it's going to be the last hurrah before the hangover begins in earnest in 2025 and 2026. So guys, let us know your thoughts. We really appreciate it. We appreciate some of the comments in the room are really, really good. Our views are going up thanks to you. And just let us know what else you want us to talk about. There's just a lot of information out there today, and we want to help you guys make money or avoid losing money unnecessarily. Phil, thank you very much. We'll catch you guys tomorrow.
Trade Genius.